Ethereum is never an asset that blows up or that completely collapses. It's always somewhere in the middle. We see this with the price action. We see this with the usage of the chain. In the last month, it grew by 24%. Tron's expansion was faster, so was Base's. And Hyperliquid is currently stealing the show of everyone. Here is the total value locked over time. We're going to talk about Hyperliquid in a second as well. But this video is about Ethereum and about its potential outperformance. Can it still continue to rally from the recent bounce? Will it outperform Bitcoin? Will it outperform the altcoin? What we're seeing over here is Ethereum relative to Bitcoin. The asset trades in a range from September 2019 to December 2021. ETH outperformed Bitcoin by more than 400%. And then came the painful crunch with an underperformance of almost 80%. Now, there's not necessarily a connection of the Ethereum outperformance to the crypto cycles. Because one might make the argument, because Ethereum is smaller than Bitcoin, that when crypto in general goes up, when it expands, that Ethereum should go up more. But that is not what we observe. At the bottom, we've got the Bitcoin price during the same time period. And have a look at this underperformance. Ethereum did really poorly relative to Bitcoin, but the Bitcoin price, it first went down, then it went up and was pretty much at the same price during that underperformance. Then we had the Ethereum rally, and yes, Bitcoin did go up. But then again, when Ethereum underperformed, Bitcoin first had a drop and then recovered again fully. So really, there seems to be no clear connection between the Bitcoin cycles and how Ethereum performs relative to Bitcoin. Or in other words, Ethereum is not just a levered Bitcoin. It doesn't just move more than Bitcoin. It has its own behavior. Now, many altcoins get traded in a pair in liquidity pools directly versus Ethereum. So Ethereum and the altcoins tend to move in the same direction at the same time. Thus, it's interesting to look at Ethereum relative to the altcoins. So there's sometimes capital flowing from Ethereum to the altcoins, sometimes from altcoins to Ethereum. Is there maybe some kind of trading range? And I believe the answer is yes. What we see over here is the Ethereum market cap relative to the others market cap. Now, what is others? It's the market cap of all of the altcoins that are not in the top 10. So it's the smaller altcoins. Sometimes Ethereum is cheap and the altcoins underperform. This is an outperformance of 179%. And sometimes the altcoins perform better relative to ETH. So that's an underperformance of 64%. Again, there seems to be some kind of a range. It's hard to draw the exact resistance, but it appears as if we have seen a floor and that current momentum is bullish, that we can probably outperform by another 50% at least relative to the altcoins. Now, instead of looking at everything but the top 10, we can also just exclude Bitcoin and Ethereum from the mix. So we look at the altcoin market cap in entirety. We just look at Ethereum's market cap relative to all other altcoins. We just exclude Bitcoin and ETH. And that's then this chart. And here the trading range might be slightly clearer, but again, the potential outperformance is very similar. It's 64% over here, in the top maybe 123%. But I wouldn't hold my breath holding too much Ethereum at that point here. It's probably better to take profit along the way. But again, the current momentum seems very bullish for Ethereum, and it's still, in the grand scheme of things, rather cheap than expensive. Here's a chart we've looked at several times on this channel, and we actually anticipated the bounce over here based on that chart. It's the Ethereum dominance, or how much of all of crypto is currently in ETH. This trades between 7% and 20%. And whoever says that technical analysis has no use at all has to explain to me why did Ethereum bounce that massively with the recent Pectra update. The Pectra update wasn't that big of a deal. Why did Ethereum suddenly outperform the rest of the market by almost 40%? I think the game rather works the following. There's some capital in crypto. It tends to grow recently, but there's a capital pool, and then people just move their capital from one asset to the next, maybe based on attention, maybe based on relative valuations. So sometimes asset A is trendy, sometimes asset B is trendy. And it's all about buying the things before they become trendy. It's all about buying the things that are currently comparatively cheap. And so this wave pattern is simply just showing when Ethereum is trendy or not so trendy. And first people start to make money with ETH again. And of course, as an extension, many altcoins go up as well, because as said a moment ago, many altcoins get traded directly in a pair versus Ethereum. Now, whenever we buy any asset, we want to buy it, of course, for cheap, but we also want to have some kind of narrative why it should go up in the future. What could be future demand drivers? Here are the leading decentralized applications on Ethereum. Number 1 is Lido, it's liquid staking. Number 2 is Aave, that's a borrowing and lending platform. And number 3 is Eigenlayer, it's restaking. I do not expect too much future growth coming from staking. This here is now Lido and it's measuring the total value locked in Ethereum. There seems to be a peak at around March 2024. So roughly for 1 year, there's no growth in Lido. When we look at the entirety of all of Ethereum staking across various protocols, again, we don't necessarily see that much more growth in the last months. Yes, staking itself is nicely split up across different protocols and across different entities, but still, this section of Ethereum seems to have matured. Here's Eigenlayer, same story for restaking. But here is a protocol that might help Ethereum grow further. It's the borrowing and lending platform Aave. It's where people deposit collateral to earn some interest, and they might also use it for borrowing assets that they're not so bullish on. This is again measured in Ethereum, and this grew by 3 to 4x in the last year. Ethereum is one of those few assets that are kind of predictable. Have a look at the number of transactions per day. It's quite steady for the last years. That cannot be said for Solana. I believe we can ignore the latest data point over here. Today hasn't yet finished, but in general, Solana's activity is fluctuating massively based on how trendy meme coins are. Ethereum's daily transactions are very steady because decentralized finance continues to get used. There's not as much meme coin trading on the chain. Solana is used by the small retail investor. Ethereum has already matured and is now getting institutional adoption. What we are seeing here is the Ethereum ETF flows. And for 1 month, we've basically just seen inflows. So Wall Street is buying up Ethereum. Here are the Ethereum ETF holdings over time, and while it's not at an all-time high, the current momentum at least is bullish. The tokenomics of Ethereum are slightly better than of Bitcoin, so the supply is growing not as quickly as Bitcoin's, but that does not necessarily mean that Ethereum has to outperform Bitcoin. Since the move from proof of work to proof of stake, Bitcoin expanded much faster in its supply than Ethereum did. In the first months after the merge, the Ethereum supply even went down because it was used that much, and so a lot of ETH got burned. But now competition for block space is less severe on ETH, and so the Ethereum supply tends to grow. Still, that merge was not necessarily that great for Ethereum. This is now again Ethereum relative to Bitcoin. The arrow shows the move from proof of work to proof of stake, where tokenomics improved. Still, Ethereum tended to underperform, and it went down until it was cheap enough for people to buy up the pieces again. Really, Ethereum is used by Wall Street and by traditional finance, and especially also as an onboarding vehicle for stablecoin. The stablecoin market cap on Ethereum is close to its all-time high. The chain holds half of all of stablecoins across all chains. Now, if the stablecoins on Tron are 100% legitimate is a big question. I'm not going to dive into details of that discussion now, but if we assume that the Tron stablecoin market cap is not 100% backed, then Ethereum's market share is even larger than 50%. If you're an issuer of a stablecoin, you of course want to use the largest of the chains, and you don't want to necessarily use Solana too much because sometimes Solana completely shuts off, right? It's not as stable. And so Ethereum is not an asset to make a 10x very quickly. Ethereum is just another diversifier, and I believe that currently the pricing is relatively low to Bitcoin and to many altcoins. It's all about riding the current wave. It's always about buying the asset that has positive momentum, and that's exactly what's currently going on with Ethereum. It's still cheap, but it does have positive momentum in the last weeks. It's outperforming the altcoins again, and it's also gaining ground versus Bitcoin, while the potential upside is still massive. Now, it's quite fascinating that most people take the hard route. Most people try to make money in crypto by finding the next asset that does a 10x return. The problem is that most assets don't do that. Most assets go down. There are a few assets that take a lot of the returns, but it's a market where the winner takes most. On top of that, we also have to be right about the macro environment, as in if Bitcoin goes up, then most altcoins go up as well. When Bitcoin dumps, most altcoins go down as well. So really, I think there are smarter ways to make money. I think it's better to try to not focus too much on the macro. I think it's better to find price discrepancies where you don't have to find the few winners. Let me show you what I mean. What do you prefer investing in? Is it the line at the top or is it the line at the bottom? Now at the bottom, we see Bitcoin's price movement. So this chart starts in February 2024. And as you know, we have seen quite a bit of a drop during that time, a 30% decline after we're now back above 100K. But the chart at the top has much less volatility. During that time, it appreciated by more than 1,000%, while Bitcoin went up by only 115%. Or have a look at this chart here. This starts in November of 2020 and it went up by 9,000%. But at the same time, here is Bitcoin, it only went up by 500%. Now what I'm showing here with those charts at the top are actually not altcoins that outperformed the rest. It's not one of those few winners. Instead, we looked at relative valuation charts. So we looked at the Bitcoin price relative to a very poorly performing altcoin. Now I'm not saying what kind of altcoins this is, but in general, this is also a Bitcoin chart here at the top. It's just not relative to the US dollar, but relative to a very bad altcoin. Let's make an example. Check out this. This is PIF. PIF had a lot of token supply growth in the last 30 days. So here are the tokenomics of PIF. Over time, there's more and more supply hitting the market. Now, if demand doesn't grow as quickly as supply, the price should be going down. And as per tendency, that is right. So this is now the PIF chart. Now, PIF is an asset on the Solana chain. So let's compare Solana with this. The price didn't always go down. And that's because sometimes Solana rallies. And so PIF comes with it. Again, the problem with correlation, the problem of the macro environment. But when we look at that PIF chart, not in US dollars, but relative to Solana, suddenly we've got a much more stable trend. Now, this is not necessarily the trend we want, right? We don't want to buy PIF, but we want to do the exact opposite, right? We might consider buying Solana and betting on falling prices of PIF at the same time to then get the delta. So in the end, we cancel out the macro because we are long one asset. We bet on rising prices of one asset, in this example Solana, and we're betting on falling prices of the other asset. So in this case, PIF. So overall, what the overall market is doing when it's going up and down, it doesn't matter to our portfolio because one thing tends to go up, one thing tends to go down. The only thing that matters is the relative performance. And then we've got very constant declines. Or if we now flip this chart, if we don't look at PIF relative to Solana, but we look at Solana relative to PIF, we get our nice growth charts. So this is now a more than 500% increase. And again, it's much less volatile compared to buying Solana directly. So this is, I believe, the easy way to make money in crypto. It is a bit more complex than just buying a random altcoin, but in the end, we have the odds in our favor because again, most altcoins tend to go down because the supply expands over time, and we are also hedged against the macro. We don't care if Bitcoin and Solana go up or down because we go both long and short at the same time. We can have a very constant growth this way. And here is what I mean with constant growth. This is my portfolio development since I started trading this long short strategy. The maximum drawdown was 5.67%. The equity is 36K and the growth over the span of roughly 2 months was 11K. Now, the most important thing here is not necessarily how much this grew. That's of course nice. But what I really like is that the drawdown was so low. We don't care about the macro. We don't care if things currently go up or down. All we care about is pricing inefficiencies. And so think about it. Do you want to buy a lot of different altcoins hoping for the one moonshot that might make up for all of the losses that in the end might never come? Or is it maybe better to just continuously grow with very little downside? I think the latter is better. If growth is predictable and if you can manage our risk properly and if you can make money independent of the market situation, we've got something that's much more valuable than just trying to find the 10x that might never come. Now again, this strategy is not as straightforward as just buying an altcoin on a centralized exchange. We do have to learn a little bit, but I actually made a video just on that topic. You don't have to watch every single video here, but the one at the top, that's the most important one. Using perpetual futures on Hyperliquid to bet on relative valuations. It's 34 minutes after you've watched this. You should understand how to do all of those setups. How to bet on charts like this or how to bet on charts like this. And how to have the odds in our favor, right? With all of those red bubbles over here. And again, be independent of the macro. It's the constant growth that's really attractive. So again, here's that tutorial video. It's part of the premium membership, thebitcoinstrader.com. And of course, I also share my own trades. For example, over here, I shorted WorldCoin recently. WorldCoin relative to Ethereum. So we're betting on Ethereum to outperform WorldCoin. So that was on the 23rd of May. I'm sharing this because this position is now closed, and I closed it on the 28th of May. And so in the end, when you've got the right risk management in place and you put on some leverage on the position, you can make really nice gains. Here was the hyper liquid chart at the time. So it already went up a little bit since then. But yeah, people are making money with this, right? This is not just me cherry picking the data. Here, have a look at this. This was one member that made some money with the WorldCoin short. Another one over here and here and here. Thanks, Gerhard. The premium membership paid itself already. And so that's in the end the fundamental idea, right? It's about making consistent gains. It's not about buying random lottery tickets, hoping for the one salvation trade. So feel free to check it out. It's currently $125 per month. It used to be 165, but currently the attention on crypto is comparatively low. Once all the tourists enter the space, I will of course raise the price again. Right now, if you sign up today, then you will lock in that price. So everybody that signs up now will not get affected by the future price increase. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. There should be a link to Premium directly over here. You just click on that card and it will lead you directly to the sign up page. See you over there. Cheers.